Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:08 p.m. That is Central Time. Today is October 12th. Well, I thought we'd kick off with China, where there is some evidence, at least, that the Sovereign Wealth Fund is now providing some assistance to the banking sector. So they waded into the market and they bought about $67 million worth of bank shares. But that certainly did help to create a bit of an upward dynamic in the bank's index, but it's not an awful lot of money, particularly when you compare it with the size of the Chinese economy. So it's a straw in the wind. And it does look likely that they will have to provide some additional fiscal support, but there's not a great sign yet that they're quite willing to pull the trigger, despite the downward pressure that continues to be exerted on the property sector. Then the Japanese market continues to rebound, and it was up another 500 points today. Now it's in negative territory in the futures market because of the weakness that we saw on Wall Street today, and that's in response to the big jump in. Well, I guess that's not quite correct. It's not a big jump in CPI, but it is stronger CPI. And that's 2 consecutive months where CPI figures have gone up, and particularly for the core reading. So that does leave, I think, the possibility that the Fed will raise rates in December. I don't think they're going to do it in November. I think what I was discussing yesterday, that the sequence with which they've been tapering and the pace with which they're raising interest rates points more towards December than November. And having paused for 1 month, they're now looking, or one meeting, I should say, they're now looking at pausing for 2 meetings and coming in for a slow end to the hiking cycle. And then possibly after that, that would probably be the last of the interest rate hikes, and that they would seek then to wait for another few meetings before even beginning to think about cutting rates. Then when we think about what's happening in the bond market, well, there was an upside key reversal for Treasuries. Well, for Treasury yields, downside for the price. And this is another downside key reversal for the price. And this is at least the second we've had in the last 2 months. So it's capping the advance in the short term, and that also helped to provide support for the dollar. And because the dollar has rallied, then we've also started to see a little bit of weaker activity in the oil price, and gold prices, having rebounded, were pretty much unchanged in here today as well. US natural gas prices, not really much to report, but European prices have popped on the upside. We've seen both the UK and the Dutch futures markets making new recovery highs, and that is despite the fact that the ICE exchange has jumped higher in terms of the margin that they're requiring for futures positions. Now, usually you get that kind of activity after a big surge, and this isn't nearly as big a surge as we had in last year in the aftermath of the invasion of Ukraine. But what they're certainly doing is attempting to curtail some of the speculative interest. But then, of course, there are so many other moving parts, particularly on a geopolitical front. And that, I think, isn't going to be curtailed by margin hikes. I think traders will be looking for vehicles to use to really bet on the potential for geopolitical tensions to flare. And that's probably going to start to become more evident within the various charts as we go forward. So let's then look at what's going on here in China.